Okay, so as I said, we're looking at this transaction here. Sold goods on credit to B Piri for 1,800,000. The type of transaction that's going on here, this is a credit sale. The two accounts that are involved in here is the sales account, which is a revenue or an income account, and we also have B Piri here, who is now our debtor or trade receivable because he's owing us money. We sold goods to him on credit. He hasn't paid us any money. All right. So he's owing us money. So he's an asset. Okay. So according to the double entry rules, increase in sales. Okay. Remember also according to the accruals concept, even though you don't receive money whenever you make a sale or whenever you incur an expense, you need to still record. Okay. Accruals concept. So increase in sales, according to the double entry rules, sales is a revenue account. Increase in the revenue account, you credit. So we're crediting sales revenue. B period is an asset. Increase in an asset, we debit. Any questions, colleagues? Okay, we move to the next one. Paid rates by cash 200,000 to Lusaka City Council. All right, colleagues. Yes. Okay. You tell us the type of transaction. Because remember, as you are explaining, consider your colleagues, all right, so that they can also understand. Okay. Yes. So anyone to give this one a try? Paid rates by cash 200,000 to Lusaka City Council. Good evening. How are you, sir? That is correct, sir. Yes. Yes. That's correct, sir. Thank you for your contribution. Colleagues, are we okay with that? So the accounts involved cash and the rates account. Okay. We can call it the Lusaka City Council account. Okay. But just know it's dealing with rates. So it's better we call it this the rates account. Okay, colleagues. Eh. So these rates are an expense. Cash is an asset. So according to the double entry rules, colleagues, what are we going to debit and what are we going to credit? Hmm. Madam, by debiting cash, it means you're increasing your cash account. Here you're paying for an expense. Yes, 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 Madam Yand. Thank you. Yes, we're debiting the rates expense. Then we are crediting cash. Cash is an asset. Reduction in an asset, okay, is credit. If an asset increases with debit, it means it is going to reduce with credit. Colleagues, are we okay with that? Are we all okay with that? Okay, are we going to change programs now to go into accounting and finance? Are you going to give up your program? If you're doing marketing, you just say, no more marketing, now accounting and finance. Are we going to do that, colleagues? Mr. Sunday, are you going to give up the course that you're doing, the program? Now focus on accounts. All right. Drew 100,000 for personal expenses from cash in hand. Yes, colleagues. What is? what is happening here. Uh-huh. Yes, that's correct, madam. Thank you. That's correct. Drawings and the cash account. Colleagues, remember drawings is when you remove money or even inventory from the business for personal uses, okay, or even other assets just for personal use. Now you must remember one thing: drawings reduces your capital. You can think of it as a contra capital account. Okay, that's why it's on the debit side here. Okay, because capital increases with credit. Remember, capital, these are the resources you put in the business, and one of these resources can be cash. Now, when you remove cash, it means you're also reducing capital, right, colleagues? So you debit drawings. Okay, you debit drawings. Then cash, since it's coming out from the business to your personal for yourself. Okay, so reduction in cash, you credit cash. So you debit drawings and you credit cash. Oh, colleagues, I forgot to mention, as we are saying these, what we debit and credit, as I said, please write them down on your papers. Okay, so that at least you're taking part in the lesson. Because if I just write it down and everything like that, you won't grasp concepts. Okay, so please be writing them down as we say this, because as the question says, you have to put these, you have to take them to the ledgers. So it's very paramount that you record. Any questions? Okay. Received a check for 1.5 million from B Peer. Okay. So remember, we had an earlier transaction with B Peer here. Okay, we sold goods to him on credit. Now he's paying. Okay, so the the accounts involved. Yes, this one here received a check 1.5 million from B Peer. That's correct, madam. That's very correct. Yes, then mhm, that's correct. That's correct. Just tell us which one is increasing, which one's decreasing, so that the other colleagues are satisfied with the explanation. You're correct with that, but we just need the why. Mhm. Okay. Okay. Colleagues, are we all okay with that? Thank you, madam. Thank you very much. Colleagues, are we all okay with that? Before we move to the next transaction? Wonderful, 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 wonderful. All right, deposited cash into the bank 1 million. Correct. Which one's being debited? Which one's being credited? Yes, that's correct. That's correct. All right. Both of these are asset accounts, okay? Cash and bank, they're assets. Colleagues, what type of assets are these? Are they current or non-current assets? That's correct, madam. Thank you. Yes. They are current assets. Okay. So since money is going into the bank account, it's increasing an asset, you debit. Since money is moving from the cash account, it's reduction in an asset, you credit. Okay. Yes. Okay. Any questions before we go to the next transaction? Paid a chola by check 1,700,000. Yes, a chola and the bank. Remember, we had a transaction with a chola here. Okay, here on the 6th. So we were owing a chola money. Trade payable, right? Mm-mm. Mm-mm. Try again, sir. Try again. That's correct. So when we are paying a liability, it means a reduction in a liability, right? When we are paying what we owe, isn't that a reduction in the liability? Colleagues, sure, 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 sure. Madam Agnes, it is, right? Yes. So reduction in a liability, you debit, right? Remember here, liabilities, yes, liabilities increase with credit, so reduction, debit. Okay. Then cash, because we are paying, it was by check, huh? By check, yes. So money is coming out from the bank account. Bank is an asset. Reduction in an asset, you credit. So you're going to debit HOLA and you credit bank. Colleagues, please get the correct um, journal entries, because when we start posting to the ledgers and when we go to the trial balance, if the trial balance doesn't balance, then it means somewhere you went wrong. Maybe you did a wrong journal entry, or maybe you posted wrongly onto the ledgers. So make sure. So here we're debiting HOLA and we're crediting bank. HOLA is a trade payable reduction in a liability debit. Bank is an asset reduction in an asset credit. Then we got paid salaries by check 800,000 and by cash 400,000. Yes, colleagues? Correct? Uh-huh. Yes, that's correct, madam. So which ones are being debited and which ones credit? Or the, or just hold on, madam. Yes, you're not debiting the bank account because remember, the bank account you're paying, so it means it's reducing. You're correct? Yes, that's correct. And also, and what about the cash account? Because remember, there are three accounts here. Mhm. Yes. So you debit the salaries account 1,200,000. You just add these two. 800 plus 400,000, that's 1,200,000. So you debit salaries 1,200,000. Then you credit bank 800,000 and you credit cash 400,000. Yes. Any questions? Like this, you indicate it like this, madam. Like this. That's how you indicate. That's how you show the double entry, madam. And then on the ledgers, salaries. Now on the ledgers, okay, it won't be advisable just to put this 1.2 million, okay, on the salaries account. You have to split it like this. Salaries account, you put here cash 400,000 and a bank, so that you know where these amounts are coming from. Okay, so that if your trial balance doesn't balance and maybe the error is somewhere here, you'll be able to tell. Yes, bank account credit side 800,000, cash account 400,000. This is how you have to show it on the ledgers. Any questions, colleagues?